Hi everyone, in this video I'm going to answer the question, is CrowdStrike stock a buy? I'm going to use my simplified 6-step framework for analysis, so let's get right into it. The first step in my framework looks at customer value, and one of the things I look at is revenue growth, and for CrowdStrike it grew from 53 million in 2017 all the way up to 1.4 billion in 2022. Explosion of revenue growth there. That's evidence that customers like what CrowdStrike is offering. And what it offers is cybersecurity solutions for enterprises and governments. Of course, we all hear stories of hackers getting in, stealing data, causing all kinds of disruption, and CrowdStrike helps to alleviate some of that. Another thing I look at is the Net Promoter Score, and this measures customer loyalty. CrowdStrike has a Net Promoter Score of 11. We look at the scale here. They rank as good in terms of Net Promoter Score. So good customer loyalty. The next step in my framework looks at unit economics, and CrowdStrike is a software as a service company which is characterized with large upfront capital investments, large investments in sales teams to go out and build up their network, build up the revenue that is then followed by scaling those investments and delivering potential for economies and scale as revenue expands. However, CrowdStrike is not there yet. Its operating losses increasing from 91 million in 2017 to 143 million in 2022, so nowhere near profitability just yet. The next step in my framework looks at the total addressable market, and according to Statista, the Security Operations Center or SOC market generated 30 billion in sales in 2021. This industry is expected to grow fast and long, with estimates to reach 45 billion by 2024 and even higher growth even beyond that. Many operations are moving online, and if so many things are moving online, the need for cybersecurity is only going to increase from here. The next step in my framework looks at competition, and CrowdStrike is in a battle with several entrenched and deep-pocketed rivals competing for the same customers. But thankfully for investors, the competition is based on effectiveness and specificity of solutions, not so much on pricing. So that's good news for investors, and the fact that the market is growing so fast alleviates some of these battles for market share when you have growth in the industry. The next step in my framework looks at valuation, and for CrowdStrike I had to look at price to free cash flow and price to sales because the company is not profitable on the bottom line. I couldn't use price to earnings. And looking at the price to free cash flow of 45, it's on the lower end of the range here for the last couple of years. Similar with the price to sales ratio of 13.38. It's about arguably as low as it's been going back to January of 2020. So not much of a long history to go back with CrowdStrike, and no availability to use price to earnings because it's not profitable. But looking at these two metrics, it's about the lowest it's sold on these two metrics going back these couple years. But I can't say that the stock is cheap because price to free cash flow of 45 is not cheap on absolute terms. Neither is a price to sales of 13.38. That's actually on the expensive side. So combining that with the relative historical range, meaning that it's cheaper than it's been, I would say it's fairly valued, right? I would strike a compromise here and say it's fairly valued. The next step in my framework looks at risks, and macroeconomic headwinds are causing businesses to pause, delay, and reduce as much discretionary spending as they can. CrowdStrike management, as well as other cybersecurity firms and software as a solution firms, have noted that deals are taking longer to close as clients are scrutinizing security upgrades more thoroughly. And I follow a lot of tech companies, a lot of SaaS companies, and I'm hearing the same story in a lot of the conference calls, a lot of management guidance. They're all talking about how it's taking longer to close deals. Instead of going through a representative that they were able to go through before and close the deal, now that representative of their clients needs to go up to their CFO to get the okay to close these deals, to secure these spending. So if every contract needs to go up to the CFO, that takes longer to secure the deal, takes longer to close the deal, because now that's another person that needs to sign off on a deal. And that's a risk, because this is the first step, is that it's taking longer to close deals. The next step could be that deals don't close at all, that these deals get um, they get canceled, or they get completely put off till next year, or until the the foreseeable economic growth is more visible, that they get more visibility in their results. And so this is not good news, and I highlighted that as a risk for CrowdStrike. All right, now that I've looked at each step in the framework, let's give it a grade. Customer value, I gave CrowdStrike a B+. Revenue growth is demonstrating that customers are coming back to CrowdStrike, showing that they like what they're offering. Unit economics, I gave them a C+, because they are not profitable on the bottom line, and operating losses are increasing. Even though operating losses as a percentage of revenue are decreasing, overall operating losses are increasing, and at least the percentage improvement is what gave it a relatively good score with a C+. Total addressable market, I gave them a C+. Even though the cybersecurity market is growing, it's not very large, less than $100 billion, less than $50 billion, so not a very large market right now. Competition, I gave them a B. They haven't proven themselves in battling with these entrenched competitors just yet. It's short history of results, but the good news is that there isn't very much competition on price, and so they get a B. Risks, I give it a C+. The near-term headwinds from a potential economic recession and slowing spending from enterprises swayed me to give it a C+ there. And valuation, I gave them a B. Their stock is not expensive. It's not relatively expensive, but I can't say that the stock is cheap either. So I gave it a B, especially when I looked at their if we were to look at an expanded metric, which would be price to sales divided by their growth rate, it would make it look even more relatively inexpensive, because the revenue is growing so rapidly on the top line. But that's not one that I looked at, just giving you a hint into an expanded valuation metric there. Okay, so now that I've given it a grade on each metric, on the next slide I'm going to answer the question if CrowdStrike stock is a buy. But before I do that, here's where I recommend you subscribe to my channel, because I am going to be providing regular updates to my recommendation. You're going to want to be tuned into that. You're not going to want to think the stock is one thing or another when I've updated this recommendation a month from now, a couple of weeks from now, or maybe a quarter from now. So go ahead and subscribe while I flip and answer the question if CrowdStrike stock is a buy. CrowdStrike stock is on the borderline. I'm almost there, recommending the stock as a buy. Excellent revenue growth, excellent industry characteristics in terms of growth for the long term. Cybersecurity is going to be needed. Even though the industry is relatively small right now, small total addressable market, I expect this to be growing at a double-digit rate for the next decade or more. So I expect the industry to go from a small to medium size in maybe a decade or 15 years from now. So I like the industry growth there. And I like the relatively fair valuation. It's not expensive. It's hard to get these kinds of rapidly growing stocks at fair valuations. They're usually trading expensively. However, the thing that made me hesitate is management commentary, not just from CrowdStrike, but across the industry, talking about slowing the deal closing process. And I'm concerned that deals are going to stop closing completely, that customer demand is going to decrease and revenue growth is going to decelerate even more. So I want to wait another quarter, maybe 2 quarters. I want to see how the industry develops. I want to see how enterprises manage their investments in cybersecurity before I feel more comfortable recommending the stock as a buy. All right, that's all I've got for this video. Thank you for tuning in, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill set and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.